I never thought I would make this video. The stablecoin previously considered most secure, namely USDC, depegged from its one-to-one peg to the US dollar. Is this another Ponzi scheme? Will USDC collapse just like Terra Luna and UST, the stablecoin, did? Is this another house of cards going to collapse? Or is this just FUD and the value will stabilize soon? These questions are not that easy to answer at this point in time. To get a better idea, let's first dive into what happened. Soon after Circle revealed that Silicon Valley Bank did not transfer 3.3 billion of its USD Coin reserves, the market responded with a massive sell-off, depegging the stablecoin from the US dollar. Circle is the issuer of USDC. The payment tech company confirmed on Thursday, the 10th of March, that wires initiated to remove balance from the struggling bank have not been processed. This means that 3.3 billion of the about 40 billion USDC reserves are stuck at Silicon Valley Bank. Concerns over USDC had started last week as Circle disclosed in their last audit that roughly 20% of the reserves are held with financial institutions, including the already mentioned Silicon Valley Bank. On top of that, money is also held with the bankrupted Silvergate Bank. The Silicon Valley Bank is among the 20 largest banks in the US, and they also provide services to other crypto firms, including Andreessen Horowitz and Sequoia. So there might be even more turmoil coming from other crypto firms. It's also unclear at this point if exchanges like Coinbase or Binance are affected as well. Let's now come to my analysis of the situation. A big difference to Terra Luna's UST is that USDC is one-to-one backed with reserves. In the traditional banking system, UST was a so-called algorithmic stablecoin without one-to-one backing. This time, the problem is not in the crypto market, but in the conventional banks. USDC has enough reserves according to their audit. Sadly, however, the reserves are on the wrong banks. Unfortunately, two of the banking partners have slipped into financial difficulties in quick succession. Almost 10% of the reserves are in Silicon Valley Bank. Further funds are held at Silvergate Bank, which has filed for insolvency. Taken together, this means that up to 20% of the reserves could be at risk. Looking at these figures, it seems justified that USDC is currently trading at a discount of about 10% from its peg. Even if we assume a total loss of the assets in the two banks, there is no need to panic, at least not if you trust the audits. Even in the worst case scenario, it seems that only 20% of the value is at risk as of today. Please note that in the case of insolvency, creditors usually receive partial compensation for their claims. Moreover, governments also like to intervene in bank failures if they are systemically relevant. If the insolvency of an institution can put the entire economic system in a precarious position, the state will often intervene at the expense of taxpayers. This can certainly be assumed for an institution as large as Silicon Valley Bank. So I personally would not panic yet. Sure, 20% loss is bad, but at least not the end of the world. Circle holds 77% of their reserves in 1 to 4 month treasury bills. This should provide a floor price of 77 cents to this stablecoin. What do you think? What's your estimate how this ends? If this was helpful, don't forget to share this video with someone who might be panicking right now. Also, don't forget to like and subscribe. Watch this video next to learn about a way more vulnerable stablecoin.